Welcome to another episode of Meet the Zor. I'm your host, Nick Powills, publisher of 1851franchise.com. Today we're talking with Naf Naf Grill. Be sure to like and share and subscribe and all those fancy things on YouTube to hear more stories like this. Naf Naf Grill coming up next. All right, Greg, I know your story. But I'm looking forward to hearing it. And I actually know most of the answer of how did you accidentally fall into franchising. But long before you're in the CEO seat, how did you fall into franchising? How did you initially fall into this industry we both love?
Well, it wasn't completely by accident, although there was some serendipity to it for sure. I was I got an undergraduate degree in economics, went to business school, studied finance, went to work for Fortune 100 kind of companies, but always really had a little bit of an entrepreneurial bug. Just didn't know exactly how that would ultimately manifest itself. The serendipity associated with that for me was I was living in Denver, lower downtown. Really, as the whole fast casual Mexican category started to emerge. I lived about a block from the second Zteca, which ultimately became Qdoba. I lived maybe a quarter of a mile from the second Chipotle. I was eating at those places constantly. Everybody I knew was eating at those places constantly. At the time, myself and the gentleman who became my business partner, which is somebody I've known for, since we were 18 or 19 years old, we were talking about setting up a little, venture fund, angel fund of some sort, right, to start making some investments in early stage businesses. And I called him up and said, "Hey, I'm gonna hop on a plane if you're free next week, and I'm gonna come back and pitch you on getting involved in the restaurant business," which we had specifically left off of the list of categories that we were going to look at. So I flew back, kind of told him what was going on in the space in general in Denver and was starting to happen elsewhere. But Denver was really kind of still the epicenter of it at that point. We came back, went to a couple restaurants, and decided that we were going to pursue something in the space. And it ultimately initially started with me having some conversations with Chipotle, because they were just a little further ahead at that point. We liked both the brands, but they were a little further ahead. And as we were initiating conversations with them, McDonald's made an investment in that brand, and they never ended up franchising. So we kind of went down the street and found the founders of Zteca and said, we're interested. What are you guys doing? They're going, "We're just getting ready to kick this off." So that's how we got involved. We were either, we still argue about it to this day, we were either the first or the second or the third franchise group to get involved. I think we all kind of signed about the same time, the first three groups that came into the system. But we were early in that. We didn't know anything about restaurants. We were really kind of financial investors at that point. We quickly figured out we had to learn how to run restaurants if we were going to, make a go of it. But that's kind of how we got connected to it. And that's kind of how we got involved. That was, 1998, I think.
Awesome story. A few things I want to unpack from that. So for you to invest life savings, equity, wealth that you've accumulated up to that point in your career into a startup, you had to have been seeing where the industry is going to go, and that there was going to be an excitement behind it. As you're evaluating that, if you can go back to that time, what made you finally say, like, yeah, we got to do this?
It's really hard to describe kind of the fervor that was around these two brands in Denver, at that time. Fast casual really didn't exist then, right? The closest thing to it, I guess, was Panera, or their version of fast casual. But today's point and shoot, other than the sandwich guys, but outside the sandwich category, today's down the line point and shoot, high quality food, build it my way. that really didn't exist until these brands kind of came on the scene. So it was just, I'd never seen anything like it. Now, I wasn't an industry follower at that time, but I think history's proven right that there hasn't really been anything like that. In terms of the excitement and the fervor around this delivery model and these types of brands, right? People were standing outside, lined out the door for an hour and a half at lunch, waiting to get a giant burrito. That over time they went from eating, once a quarter to once a month to once a week to, 2 or 3 times a week, right? It became ubiquitous, and they were running, huge volume out of these little boxes, in not the greatest real estate in the world. So there was clearly some connection and some resonance, that we obviously thought had legs, or we wouldn't have gotten involved, or tried to get involved with it, which we ultimately ended up doing.
We'll get into Naf Naf in a minute, but when you're talking about that story, it feels like those are once in a blue moon stories when it comes to the restaurant industry. And I mean, there's others, like I think Shake Shack moving their line to the front of the restaurant, which always created a perception that there were lines out the door. Like there's things that happened, or the self-serve frozen yogurt craze that appeared out of nowhere, but there was no point of differentiation in the product. They were all getting from the same supplier. But if you think back on your career, has it happened? Like, has that moment happened that frequently? I guess down the line pizza a little bit, but.
Yeah, I think a lot of people have tried it, right? I mean, almost every culinary category now, major one for sure, has tried their version of the fast casual delivery model. At least the emergence of it that I was close to and I saw was in fast casual Mexican. Pizza has theirs now. Pasta has theirs now. They're out there. But I've not seen something, kind of emerge where it didn't exist prior to that. I wouldn't include, maybe other culinary categories moving into that delivery model, right?
Yeah.
That's not quite, I guess, as meaningful, maybe necessarily. And it was Chipotle, right? It's what became, maybe the most unique, at least during my lifetime, kind of the most unique, restaurant concept that any of us have ever seen, right? In terms of the volume being run on a per square foot basis and all those kinds of things, right? Matching, kind of marrying food quality with speed of service. It was really unique, right? Now, Sweet Greens and I mean, you can point to others, but that was kind of out of thin air, right? And that was pretty unique.
Yeah, I mean, I don't know if we can ever see it again. I'm sure we can. Like Chipotle comes out of the ground at some point. I find it fascinating though. There's so many brands, even that we've worked with, where if we call them the Chipotle or the Chipotle of insert category, they're like, don't call us that. But it's like, no, the consumer showed us this is how they appreciate getting their food. What's wrong with calling it out as a good thing, right?
Yeah, it's a compliment, right? I do joke though. We're in the restaurant business. We've got a little investment company that we've had for a long time, and part of it's restaurants, part of it's real estate. We do a lot of retail real estate development, mostly for restaurants. And then we have an emerging kind of a venture fund that we invest in emerging brands with. And we joke all the time that if we had $1 for every time somebody told us they were the next Chipotle, we wouldn't be, we'd be good, right? We'd be done. And I even catch myself saying it occasionally, but I always caveat it by saying, I don't mean in terms of, what they did and how they did it or what became of Chipotle. I mean it more from like a menu perspective and in that context, right? How we think about menu development, fewer things done really well. And so when people serve it up in that vein, I'm willing to listen all day, because why wouldn't you want to study that model and why it worked and how it worked, right? As an investor, however, when I get pitched that, we're the next Chipotle, my brain always kind of turns off a little.
Right. You're like, yeah, sure, get in line with everybody else.
Right. Yeah.
How big did you grow your Qdoba portfolio before? And I assume you exited the portfolio.
We did. We were early in the brand, as I mentioned, and by the time we sold, we were the largest developers in the system. We've done 40 or so restaurants across really 2 major markets, and just had a great run there. Really learned the business there. They had a great management team in place. Guy by the name of Gary Beisler was the CEO there. Gary and I've had a really long standing relationship, and Gary, for good or for bad, is partially responsible, at least for me being at NAF today. But we just we cut our teeth there, and we learned very quickly what we didn't know about the business, and it took us a minute to realize that we better figure it out. Right, you got to operate. We were financial guys, right? And that's fine, but you gotta find a way to run good restaurants, right? And so, a decade or so into that system, we were the largest developer in the system. We did successfully sell our stores back to Jack in the Box after Jack in the Box acquired Qdoba. I was on the earnings call when Linda announced our acquisition as being accretive to the brand, right? So we had built a nice sized business that was run very well, that was very profitable, and we were really very proud of that, because we had to really learn it, from the ground up.
At what point during your journey do you go from franchisee to franchise operator? And I want to tee that up by saying, I feel there are people that get into franchising as a franchisee. A franchisee, in my mind, is someone, maybe 1 or 2, maybe 3 locations, but they're not really scale minded. They're more so like, how do I do income replacement? How do I operate a small business? How do I feed my family? And what does it equal? When you're talking about tens of locations, which you grew, like you're an operator, like you're operating a business at that point. You're not operating restaurants. Early on, was that the pathway that you were going, or was there a switch that got hit that you're like, okay, now we're really business operators?
I think early on it was our desire. It remained to be seen if we could make it happen, right? It's not the easiest thing in the world to pull off, especially when you start to get geography involved and multiple markets and that kind of thing. But our first deal with Qdoba, with Zteca, actually, before it was even Qdoba, was 10 stores. We were going to bring the concept back to Central Indiana. Chipotle had announced their expansion markets out of Colorado. Indy was one of them. So I hightailed it back here. It's my home market. I hightailed it back here, and we started building restaurants. We built 4 restaurants, opened 4 restaurants the first year I was on the ground here, with no experience in the business. And I still to this day say, well, now I think it was the smartest thing we ever did. For a while, I thought it was to be determined whether it was the smartest thing or the dumbest thing, right? Because it almost killed us, right? It ran us out of capital right away. We didn't know what we were doing. We were understaffed. But we got a foothold here, and we were able to compete very successfully in this market for a very long period of time. And as we got good at it, and as we started to figure it out, and part of that was being close to a young, small brand, right? Where we were in the room, right? Yeah. We interfaced with Gary and his team, right? We were right there as all this was happening. And that was a tremendous education for us. We began to feel like, hey, we can do this at some scale, which is what we wanted to do in the first place. And so we ended up going way, our original goal was, gosh, I hope someday we can build these 10 stores that we've contracted to build, right? And by the time we were done, it was, 40 or whatever it ended up being. And so we were able to make that happen, but we had to build the muscle, really, to be able to do it. And for us, you're right, franchisees come in all shapes and sizes, right? We ran kind of a portfolio company in terms of the way we looked at our holding company. And we wanted to be, if we were going to bite off, if we were going to put another leg on the stool, let's say, right, we wanted it to be of a certain size to make it kind of worth the while. And so we felt like we needed to do, at least 10 or 15 of these things, probably, for it to be worth the lift, right? And worth, getting up the learning curve in terms of figuring out the industry and the business and how to do it, all those kinds of things. So for a minute, it didn't look like we were going to kind of be able to eat the elephant, so to speak. But ultimately, we were able to.
Well, there's this spot, whether it's at 6 units, 7 units, or 8 units, and I think that's actually the biggest challenge for a business operator, in my opinion, in franchising, because all of a sudden the profitability is trailing like this, but then you've hit your max out of what you can do for economies of scale, and you have this dip somewhere between 6 and 8 units. And when that happens, you have to have the right mentality that says that temporary dip is so that when we get back going again, it's going to have the same projections. It just is going to go to so far exceed the first one. I think that's what pulls an operator into the ability to actually hit the 40 stores or whatever the number is, because then they've already gotten over the cash hurdle where they're not stressed out. And that now you're in a game where you're playing a game. And I think it's obviously kudos to you in your process of getting there. And what is fascinating to me in your story there, it's only happened twice, and I've worked with hundreds of franchisors. One was Qdoba, the head of franchise development. This was very early on in the history of us having our business. I said, "Who's your target operator?" And he said, "The multi-unit franchisee." And this is long before multi-unit franchisee is a term that every single franchisor uses and who their target is. But Qdoba said it early on, and they said, "We're looking for people that can afford to open up 5." So that doesn't mean we're going to reject someone that can't, but we're going to hyper focus in on, can you afford to open 5? And from a qualifier, that put a governor on who was being let in, because now when you open up your first restaurant, you're not overwhelmed or stressed by the financial side, because you can actually afford multiple of these, and you can hopefully stay on a development scale. So Qdoba was one. And then there's a brand that we still work with, Slim Chickens, that I remember being in the room with the founders on unit 1. I said, "What's winning?" And they go, we just want 5 franchisees who each own 5 locations. Right. And now obviously they've gone far beyond that, but it was another brand that said, we're not going to reach up in the sky and come up with a number of how many franchise deals we're going to have. That's fake. We're going to go after the right people. When they come on, we're going to give them the scaffolding, and we're going to make them successful. And it sounds like that model worked for them. And so now leading to my next question, I would imagine some of that scalability, those learnings, the way that you looked at the brand, I would assume that's carried over into your current role. That's giving you have a tool of being franchisee to franchisor that many don't.
Yeah, no, I think you described it exceedingly well. And at Qdoba, you were probably talking to Todd Owen, or it might have even been the Dan Rowe days. It might have even been before then, but I'm not sure. But yeah, they were very, very disciplined about that in kind of their first run. After the business got sold, I think that model changed a little bit and became a little bit different, and frankly, probably a little bit more difficult to manage.
Right.
But through that first arc of their growth, they were very, very disciplined about that. And I learned a valuable lesson, right? Kind of watching that, and we learned it ourselves, right? And your point is just, it's spot on in terms of how you think about, or how we think about the economics of this. There aren't really many levers, right, in this business. Everybody thinks there is, but there's really not, right? They're all independent boxes. They all have to work independently. Yes, you can get some leverage on occupancy cost if you run high volumes. Yes, you can get some leverage on in-market advertising and marketing if you have a certain presence. But really, you're running individual P&Ls, right, in all of these locations. And the real leverage is, if I'm going to put a multi-unit person on the ground, how many locations can they oversee, right? And the more, the better, right? Which is why Chipotle's model was brilliant, right? They went urban to suburban, right, as they began to develop early in their life, because you can cover more stores that way. You get more volume out of each individual box that way. It was a very efficient way to think about how to develop, and we were competing with them and watching this, right? So we went through the same thing, and our metric was, if we're gonna go into another geography, it has to be a geography that we can cover with one additional multi-unit person. And as soon as we make that commitment, we're not going to build one store. We're going to get to 5 or 6 or 7 or 8 or whatever the number is that person can cover as quickly as we reasonably can, right? Because that's where you get the leverage in kind of the infrastructure of your company. And so That's how we developed. That's how we're encouraging our franchisees to develop. The rub is, though, today, it wasn't so true when I got involved, because, guys like us with no experience could kind of show up and go, hey, what about us, right? Today, those multi-unit, particularly multi-unit, multi-branded franchisees have lots of options, and they have lots of people courting them, right? So one of the things we've had to do is work on moving our brand kind of up the food chain, so to speak, right? So we can start having those kinds of conversations with the kind of franchise groups that we're all chasing, right? And you gotta have certain box economics, and you gotta have certain corporate infrastructure, right? You've got to be able to make a compelling case that of the options that they have available to them, they should pick you. And that took some work for us. We started franchising right before the pandemic. We probably weren't. I wasn't with the brand then. I say we, the brand. We probably weren't quite ready, although my group was the first group to sign up to be franchisees. But during the pandemic, we were able to really kind of take a bit of a pause on that and really assess, right? Make lemonade out of lemons, I guess, a little bit. Really assess where we were and where we needed to be, right? To be not just a viable franchise brand, but a compelling franchise brand, right? And we've worked a lot on that over the last 18 months or so. And I'm very, very pleased with the results of it. I'm very excited to get to next spring when we'll put out our new FTD, our new item 19. And I think for the first time, our brand will really be in a position to go out aggressively seeking the kind of franchisees that we're all seeking, right?
Well, I mean, that's what you just said is is the magic, in my opinion. Not blowing smoke, but you understand what you had to look at in an investment, and you understood with Qdoba what your cost to build was and what your expected profitability was. And the only reason you were going to continue opening up stores is because you got the science down of this is how much it costs to build it, and this is what our profit margin is going to be at what scale. And so when you have that predictability, of course, you continue to push down the pedal. And now you hit a little bit of snag when you went out of market. But I would bet that institutional knowledge, when you're advising a franchisee to say, just so you know, if you're going to do this, here's what you should expect, is going to give you another tool in the toolkit. So for them to bring you on, for you to invest into the business and say, okay, before we go to market again with this offering, unless we're just going to go sign anybody, then we have to make this feel sound when everybody has knocks on their door saying, buy my franchise. How can we stand out? And it sounds like you've put some of that work in, and you're proud of that.
We have. We've really tried to reverse engineer it, right? We kind of know what the answer needs to look like, right? To be a compelling brand to the folks that we want to be appealing to, and then you kind of work it backwards, right? We've had to do a lot of simplification of the operational side of our business, right? Our brand started when Sahar originally started the brand. The first 3 stores were more of a Panera model than a point and shoot model. You went up to a counter, you ordered, you went and sat down, they gave you a buzzer. There 15 minutes later, your stuff was ready. But then as they started to grow, they started opening the more point and shoot, right, models. And so we had a hybrid of things out there, both in terms of the menu and in terms of the operating model that we were in. And depending which one of those you were in, or how much of the old menu you tried to bring forward into the fast casual point and shoot model, some of that was getting pretty complex at high volumes. It started to kind of show some cracks a little bit and become, you needed too much skilled labor to really be able to scale it in the fast casual space. And so we spent a lot of time really evaluating and rationalizing the menu. We morphed the old, what we called the O3s, the original 3s. We morphed those into the fast casual, both model and menu. And then, long story short, we kind of got under the hood, right? And this is where, being an operator, being a franchisee, this is what we did, right? I mean, you try to optimize, the box that you have, right? And so we were able to roll up our sleeves and really rework some of these things to where today we're running higher volumes than our brand's ever run. And we're doing so with about 15% fewer hours than when I got here pre-pandemic, right? It's a nickel and pennies and dimes business, right? And if you can get some big chunks without sacrificing food quality, without sacrificing all the hospitality cues and those other things that you want to be able to touch on as well, but just make it easier to deliver the product that you're trying to deliver with a skill set that you can get in the marketplace for a number that you can afford, right? You're just able to start to put that model together and have it be a little more coherent and more scalable, frankly, which is what we were going for.
Well, you're removing the unpredictable side of franchising, which I think that's where a lot of franchisors fail, is there's average unit volume, but it's not really engineered to have that as a consistent. You look at what is the volumes of the stores across the system, it's all over the place. What you're engineering is you're saying, let's engineer consistency so that at least the expectations are set. And then high performers might do a little bit more, but it'll be a marginal shift off of the average. And I think that is part of the magic. If a brand is going to get the sea legs and take off with multi-unit operators, is the consistency, which it seems like you're engineering it. It seems like, I mean, I'm excited to see where the story goes. I can look at the category as a whole, and similar to what happened with Qdoba and Chipotle, and then call it anybody else that competed. It was educating the consumer that this is a viable food source for when you're going out. And it's happening in the Mediterranean category right now with Roti and you guys and Kava and all the independent mom and pops. Like you've prepared this thing. You almost got lucky in having a little bit more runway to get prepared for this moment. But now the moment's here, and it seems like you've geared it up. Is there anything else to the ghost candidate that you want them to know about the business that we haven't touched on? I think I could talk with you for another hour about this, but closing thoughts?
Yeah, well, I would agree with what you were just saying there, and this is why we ran across my investment group. We ran across Naf Naf, I think in 2016 or 17. Really loved the brand. They already had a private equity sponsor. There really wasn't an opportunity to get involved. They weren't franchising at that time. But we really liked it for a lot of the same reasons that we like fast casual Mexican a long time ago now. Is we just felt like this was an emerging white space. And as people got exposed to fast casual Mexican and that delivery model, we were pretty confident based on what we were seeing happening in one market, granted, but we were seeing it firsthand. We were pretty confident that had legs and that would do nothing but expand. Now, no one could have predicted that what happened would have happened, right? But this is, I've said to people before, this path through these woods feels pretty familiar to me, right? We're kind of introducing a little bit of a new delivery model into this space, right? Into this Mediterranean, Middle Eastern, Greek, however you define it, space. There hasn't been fast casual entrance into this really prior to Cava. We're introducing a number of new taste profiles, which people may be a little slow to adopt or a little hesitant to try, but once they do, they dig it and they stick with it, right? There's a real health halo around this category because you can eat very healthily in this category if you choose to. You can indulge as well, right? Mm-hmm. But you can, the Mediterranean diet is becoming very well known and people understand the health benefits of it. And so we've got that halo. And it's not burger, pizza, sandwich, burrito, right? And I think as people look for new places to have those dining occasions, right? This is a natural white space for them to kind of migrate into, and then becomes a ubiquitous part of their consideration set. And I think that's happening, right? That's happening in this category. And Cava going public and running the volumes they run, I think, is the proof case, right? If anybody needed one. That's out there now. And that's really just accelerated our excitement around what we think is going to happen in this category and the role our brand can play in it, right? Because we're a pure play. Here you go. We're a Chipotle-esque, right, play in this category in terms of our delivery model, the way we think about the menu, et cetera, et cetera. And I think that's gonna provide a lot of growth opportunity for us.
My gut has rarely been wrong. I don't know if it's ever been wrong, but based on what you're saying, your energy onto this business, the category that's in, I think the runway is looking pretty sound. So I look forward to hearing more of your story, Greg. Thanks for sharing some of it with us on this, and I hope we talk again about this topic. It's a fantastic topic and a fantastic brand. So looking forward to seeing where it goes.
My pleasure, Nick. Thanks for the invitation. I really appreciate it.
Thanks, Greg. For Greg, I'm Nick. This is another episode of Meet the Zor.